Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the one and only commodities investing legend and the founder of Rule Investment Media and also former CEO of Sprott, Rick Rule. Welcome back, sir.
Ivan, thank you so much for having me back. I enjoy these conversations.
Yeah, it's an absolute pleasure having you on. And we're seeing some massive uncertainty in the markets right now, Rick. So we wanted to get you on to talk about it. The Fed is trapped, and it's a trap of their own making. And the most important question I have is, where do you see precious metals going for 2023?
I see precious metals, at least for the next 3 months, being fairly soft. I'm amazed by the apparent strength in the U.S. economy. Make no mistake, I've been through rising interest rates before, and sometimes the impact of rising interest rates, the negative impacts, lag. But I am amazed at the relative strength of the U.S. economy. I think as a consequence of that the Fed can and likely will engineer at least two more 25 basis point rate increases. The near-term impact of that is that other forms of savings and investment assets become more attractive, relatively more attractive than gold and silver. I would point out to your listeners that when I say relatively, I mean just relatively.
Yeah.
The truth is that the nominal interest rate that you receive on your savings products, even with two more 25 basis point rate increases, still means that your savings yield is less than the destruction of your purchasing power.
Yeah, that's not good.
But you asked me the question. The truth is that in the near term, perception is more important than reality. And the perception about the land is that all is good, that the big thinkers have once again saved us from ourselves, that the Fed is engineering a soft landing. And I think the consequence of that is that faith in conventional savings instruments and faith in the US dollar will continue strong to the detriment of gold and silver. I happen to believe the underlying premise is wrong, but it doesn't much matter what I think. I don't make a market. The consequence of that is that I continue to make systematic purchases of gold and silver for my own account, and I continue to build on my existing inventory of gold and silver stocks.
Where do you see, like you answered it spot on for the short term for precious metals, and where do you see it long term? You said there's two more rate hikes you see the Fed doing, but what do you see after a pause? Do you see them immediately pivoting, and then what happens to precious metals then, Rick?
I think speculators need to look at two scenarios. One scenario is that what the Fed is doing works, that increasing interest rates brings down the level of economic activity to the extent that they engineer a real interest rate, which is to say that at least by conventional measures, the inflationary numbers are less than the yield available in savings products. In that case, people have a very, very, very long wait. The other alternative is that we're looking at 1975 again. For those of your listeners who aren't quite as ancient as I, in 1975, concerned about inflation, the Fed raised interest rates very aggressively and appeared to be getting away with it for a while. When the impact of those higher interest rates was felt, particularly in the bond market, but also in the equities market, and then in the housing market, the Fed lost its nerve and had what's now referred to as a pivot.
Mm-hmm.
And the consequence of that is, and I think it's important to go over the history in terms of the gold price. In the period 1970 to 1975, before this period of rising interest rates, the gold price had risen from an admittedly price-controlled low of $35 an ounce to $200 an ounce. That six-fold move in 5 years got a lot of attention. Mm-hmm. When the Fed raised interest rate, the gold price fell in 9 or 10 short months from $200 an ounce to $100 an ounce, Jeez. A 50% decline. And that 50% decline shook out a lot of the new supposedly faithful. When the Fed had to pivot, gold went on a truly epic run. Went from about $100 an ounce to, if my memory serves me correctly, $850 an ounce. And it did
Wow.
that in 6 short years. The point of all this is that nobody knows exactly what's going to happen in the future. Everybody wants certainty, but certainty is not on offer. The point of that soliloquy is that anybody who doesn't own some gold and some silver in their portfolio is a person who necessarily believes, as an example, that the government is on their side. I don't think that's prudent. Anybody who thinks that there is a prudent case for investing in physical gold and silver should consider, with funds where they can stomach volatility and some risk, owning the gold and silver stocks. People whose means and whose willingness to work enable them to speculate might want to take, as I do, their exposure further. The metals equities, but in particular the silver equities, are as volatile a financial asset as I've ever seen in my life. We've discussed on your show before
Yeah.
the fact that the combined market capitalization in the silver equities space is so small that when the narrative begins to appeal to the generalist investor, there is literally not enough market cap to handle the inbound capital. For the right speculator, this is a truly epic circumstance. I came in the business and watched Coeur d'Alene, which I sadly didn't own and couldn't pronounce at that point in time. I watched it go from 10 cents a share to $65 a share.
My goodness.
Sitting, unfortunately, on the sidelines. That lesson wasn't lost on me, however. The next silver bull market, I was part of both Pan American and Silver Standard from inception, and watched them go from 50 and 72 cents respectively to $45. The point of this is not congratulatory chest beating, but rather to say that you build positions in sectors when they're out of favor, speculating on possibilities or probabilities. And the level of exposure that you have really depends on your means and your tolerance for risk. There is no saver, pardon me, in the US market that I think can regard themselves as being safe if they don't have at least a small component of physical precious metals exposure in their portfolio. No contrarian investor that I think should have an equities portfolio that isn't exposed to natural resources and precious metals. There is no speculator that I can think of in his or her right mind that doesn't understand the speculative setup, if they can stomach the volatility and the risk, that doesn't understand the potential upside in silver equities.
And how much inflow, like you said a little bit earlier, that the certain amount of inflow would need to come into the silver space or the silver mining space for it to have the repeats like you've seen in past history. Do you know a certain amount of inflow? Like, would it be 10 billion, 100? Like, what's that number? Do you know that roughly, Rick?
No part of that. No part of that. You know, if you dial back, Ivan, to when you first had me on your show, probably 2019, 2020.
Yeah.
I'm going to suggest that the inflow of cash into the junior uranium equities that took them up fourfold, admittedly not tenfold or 20-fold, but took them up fourfold, was probably $1 billion US.
Wow.
Remember that prices are set on the margin. If the market cap of a sector is $5 or $6 billion, maybe 50% of those equities are closely held, so that the amount of the market that needs to turn over to generate inordinate price increases is fairly small.
Wow.
And I suspect that the silver equities market would bifurcate or trifurcate, meaning that the highest quality silver equities, the Wheaton Precious, the Pan American silvers, those sort of things would move first. But their moves would be less extreme. The more responsible, more muscular juniors, the mags, the silver crests of the world, would move next. And I think they would surprise people. But what really will move will be the best of the tertiary stocks. And trying to determine the best will be a real challenge for most people. Companies that have managers who are experienced in the silver business, not
Mm-hmm.
just experienced promoters. Companies that have deposits of a size that there's some optionality, meaning if the silver price goes up, that the deposit is large enough to attract real attention. And people where enough is known about the deposit, a 43101 at the very least, that you can construct evaluation metrics using various price points to determine optionality. Those stocks, those few stocks, I think are poised to perhaps not repeat the silver standard and Pan American moves, but certainly they're poised to give enough performance that, put crudely, they satisfy every level of greed that I possess.
And you said it, you nailed it right on the head. And I just want to ask you, if you don't mind me asking, Rick, in your portfolio, do you have like a certain percentage that is just explorers, or do you lean more towards the producers, or do you just have a high risk tolerance? What do you have in your portfolio for everyone in the audience so they can set up their path?
Ivan, I have a very high risk tolerance, and I'm very patient, and I regard volatility as a tool.
Nice.
So I'm uniquely suited to speculation. Oddly, at age 70, I'm also very patient. If I think something is more likely than not to happen, I'm willing to wait 2 or 3 years in anticipation, if it's cheap enough to justify the wait. With regards to portfolio orientation or allocation, I react to markets. If the penny dreadfuls are really cheap, particularly if I can get a private placement with a warrant, I'll do that. What I've found in my own experience, going back now 50 years, I'm sad to say, in precious metals, is that the biggest and the best move first. And they also often reward you for dividends. So you can afford to be patient because you're getting rent on your money. Right now, I have this odd, almost like barbell portfolio. I have a reasonable number of companies where I'm trying to own beta. I'm trying to own the upside in the space. I'm trying to own upside in the space with as little downside operational risk as I can. And I'm trying, where possible, to get rent on my money by way of a dividend, which overcomes the time value of money challenge. I also have always been interested in assets that I think are potential tier one assets. $5-6 billion in situ recoverable reserves and resources, deposits that will likely be taken over, irrespective of whether they're silver producers or sand and gravel producers. I don't care. And where I have the opportunity to look at an asset that is cheaper, less well understood, and I think that I can do a better job assessing the risks, but also the upside, I speculate. And I'm probably uniquely suited to speculation, in the sense that I'm willing to spend money on consulting geologists. I'm willing to spend money on engineers. I'm willing to understand the risk.
Right.
And I'm very willing, Ivan, as a consequence of my experience, to be patient. For me, the average 10 bagger or 20 bagger in my portfolio, and mercifully I've had scores of them, have taken 5 or 6 years to achieve. You shouldn't be in the space if you have trauma holding stock over a long weekend.
Yeah, you need a lot of patience then, especially if they're all over 5 years, you're 5 and 10 baggers. And I wanted to ask you, Rick, looking at the silver mining industry and the gold mining industry, comparing the two, do you have any royalties, like royalty mining company or like gold royalty companies, or no, you just don't look at those?
I love the royalty space.
Interesting.
I love a business where your gross is your net. A high margin business. And I love particularly the royalty companies with very large royalties on very large deposits. In my life, all deposits yield surprises, and big deposits yield good surprises, and small deposits yield bad surprises. And in the beta part of my portfolio, I prefer good surprises to bad surprises. Royalty companies got very, very, very hot 3 years ago. And we went from having, 7 or 8 of them to having 70 or 80 of them.
Wow.
Now they're beginning to shake out. Now you are beginning as a speculator to be able to look at companies that raised $30 million, had $100 million market cap. After they raised the $30 million, they turned it into $50 or $60 million in net present value. But because the stock didn't perform, even while they were building the company, you can buy that $50 or $60 million for a $20 million market cap.
Wow.
It's a good time to be in the royalty space. The royalty companies, unless you happen to hit a young Franco-Nevada and are willing to wait 30 years, which I did, you aren't going to make a 10-bagger on a royalty company. What you're going to do with a well-chosen portfolio of royalty companies is make very consistent compound internal rates of return and still enjoy the upside when it comes from a secular bull market.
You held the stock for 30 years, Rick?
Absolutely.
That's incredible.
I bought it in 1982. I held it. I sold some, but I held it when it was bought by Newmont.
Wow.
Continued to hold Newmont, and then bought back Franco-Nevada when it was spun out of Newmont. So I've owned it almost continually since 1982.
Wow, that is incredible patience, Rick.
I guess that's 40 years. Well, I mean, when they initiated their dividend, I remember that their dividend on an annual basis exceeded my purchase price for the first 10,000 shares I bought.
Wow. Wow.
So I had reason to wait.
Yeah.
Remember, too, that they ran a very, very, very large business at Franco-Nevada with a staff of 32 people, which included the receptionist. Their management expense ratio, if you had considered them to be a mutual fund, which in effect it was, a mutual fund of royalties, their management expense ratio was 12 basis points.
Wow.
Whereas many mutual funds expense ratios 200 basis points.
Wow.
Wonderful collection of assets. It was honestly and capably run. They had the very, very, very good manners, I think, to return surplus cash to the owners, the shareholders. Why would I sell?
Yeah, that makes sense. Yeah, why would you sell? And
if you sell a really good company, you run a huge risk of doing something stupid with smart money. And I think you do something unpatriotic too. You pay tax.
yeah, yes, exactly. Especially right when you sell it, might as well hold it for the long run. And you also have the Rule Symposium coming soon, and we're on natural resources. Can you tell us when that is happening exactly, and what are the benefits people can gain from this, Rick?
Thank you for that softball question. My favorite topic. The Rule Investment Symposium now goes back, I think, 20-something years. So first of all, it stood the test of time. This year, it's in Boca Raton, Florida, July 23rd through 27th. I assume you're going to post a link to it.
Yeah, I will in the description.
But let me tell you why. I mean, first of all, it has stood the test of time. This is not a Johnny-come-lately conference. We've demonstrated value for investors for more than 2 decades. How do we do that? We have great big picture thinkers, the people with the broad paradigms, but not the ones you'd see on CNBC or NBC or even in the Wall Street Journal. Jim Rickards talking about government having been in the belly of the beast. My favorite gloomster, Doug Casey, Bill Bonner, Grant Williams, Nomi Prinz, people whose big picture has been shaped by experience in big business on Wall Street or in banks. They know the warts from the inside out. If you believe in that worldview, and that worldview is the worldview of natural resources and precious metals, we have the best analysts and portfolio managers in the resource and precious metal space in the world. Mm-hmm. People who have been continually involved in resource markets for 3 decades, not people who learned to spell gold in 2020. More importantly, Ivan, we have a club that we call the Living Legends. These are entrepreneurs who have built multi-billion-dollar companies from scratch in the natural resources business, people who have been in the business through thick and thin. And their lessons, where they tell you how they built the companies and how those lessons made them better investors and what you need to know to be a better investor too. Or where I grill them on stage and say, tell me 3 things you own in your portfolio that you don't run. Tell me other people's deals that you think are great and why. I mean, this is a wonderful circumstance. These guys aren't gurus. These guys are where the rubber meets the road. You
Wow.
know, following Robert Friedland around my exhibit hall to see what exhibitors he talks to, worth a ton. And speaking of exhibitors, Ivan, at most conferences, the qualification to be an exhibitor is a check that cashes. That's it. Attendees have told us that our exhibitors are content too. And the consequence of that is that every public company exhibitor at our show has to be owned in the accounts of the producers of the show. There is sadly no guarantee that if I buy a stock, it goes up. But there is a guarantee that I know it well enough that I've invested both my time and treasure in it. So every single public company exhibitor has been vetted. The upshot of all this, Ivan, is that like every other investment education product I've ever offered, there's a gold-plated money-back guarantee.
Nice.
If you come to the Natural Resources Investment Symposium in Boca Raton physically, or if you subscribe virtually, where you can watch it in the comfort of your own home or wherever you wish, two things. The first is that you'll have access to all the conference tapes for 6 months, because there's 50 hours of programming in 4 days. You can't understand it all. You cannot. You'll have to watch it a couple times. But the second is, if you think for any reason that you didn't get your money's worth, email me. I'll give you your money back.
Wow.
No questions asked, although if you do want your money back, I'd appreciate it if you told me why, so that I can make the product better. I need to say, too, in 30 years of offering gold-plated money-back guarantees, I've probably had to refund 0.1% of the tuitions charged.
Oh yeah, so nobody's gonna do the refund. It's a good lesson.
Some do, but the truth is that I don't want to charge people if I don't give them value. It's just inconsistent with what I'm trying to do in my life. So I think those factors combine to make this a high probability investment.
I'll make sure to put the link in the description, because we're super excited to see that, and you can watch it live through the segments. So that's you said there's 50 hours worth of segments that's going to be on the live.
At least 50 hours in the live stream.
Yeah, that's nice.
The workshops are recorded, all the little stuff. You know, obviously we can't record the private conversations at the water cooler.
Yeah, of course.
Well, of course.
Yeah, we'll put it in the description for everyone to see, so they can click on the description and it'll take you straight there. And Rick, it's such a huge pleasure having you come down to Wall Street Silver and talk about the commodities industry, and hopefully where we're gonna, maybe in the next 2-3 months, we can have you back on to see what happens with Powell and the silver and gold community.
I look forward to that. One final message, if I may.
Yes.
I've enjoyed my conversations with Wall Street Silver subscribers for a long time. Anyone who'd like to continue that conversation is invited to do so at Rule Investment Media. Go to the site, list your natural resource stocks. I will personally rank them 1 to 10. I'll comment on individual issues where I think my comments might have some value. Absolutely free. Absolutely no obligation. Just go to Rule Investment Media, list your natural resource stocks. Please no pot stocks. Please no tech stocks. Please no crypto. You know, leave an old guy to what he does well.
Yeah, that's true.
And thank you again for having me back on. I look forward to conversations at any time on any natural resource or precious metals related topic.
No problem. Talk to you soon, Rick.
Thank you.